You can't trade consolidation.
You can! You can do it! You can! You can!
But this one indicator turns consolidation into clear price action, and I'm going to show you exactly how you can trade it. I caught this 6% trade on live on Monday, and I also sent it into my Signal group, so I'm going to give you the full breakdown and exactly how this indicator completely and utterly transformed my trading. Now, what this indicator does is it essentially breaks the market down into three distinctive sessions. We have the Asia session, the London session, and the New York session. Now, what's really important to remember is each session is very different and has its own objective that it needs to complete. Now, the thing we're going to focus on in today's video is specifically the relationship between the Asia session and the London session. Now, what you've got to understand about the Asia session, it is accumulatory. So basically, it moves sideways, right? It moves in consolidation, accumulation, whatever you want to call it. And then the London session reacts heavily off of the Asia high and the Asia low. So what we typically do is we'll sweep the Asia high and move down, and then sweep the Asia low and move higher. And you can see this over and over and over again in the markets. So essentially what we're looking for here is for the London session to open, sweep the Asia low, and then look for buyers higher, or vice versa, sweep the Asia high, and then look for sells down. Now, understanding this relationship between the Asia session and the London session can turn what looks like consolidation, like this, into clear price action where you're able to read exactly what price is doing. Now, it's not just as simple as waiting for the Asia high to get swept and placing a sell. There's two clear steps that you need to do, one before and one after the Asia high gets swept, and I'm going to break them down right now for you. So step number one is having a clear higher time frame bias, meaning the direction you want price to trade into. Now, if you really can't find your higher time frame bias to save your life, there's two very easy steps again that you can apply. Now, these steps are right here. So number one is CRT, and number two is internal external. I'm going to give you a brief overview. So first of all, CRT is essentially a candlestick pattern where we wait for two clear candles. We want the first candle to be our trading range and the second candle to be our manipulation candle, and then all other candles after that are distribution. So essentially what we wait for is we wait for candle A and we mark out the highs and lows. It can be any candle. We then wait for candle B to take out the high but then close back within the range. Now this shows us that we've manipulated these highs and we're now going to target these lows. So hence every candle that forms after this, we're looking for it to trade down into the low. Now, the other thing is internal, external liquidity, and this is in essence how trends form. So you'll notice here, we all know that trends form like this, right? They go down like this or they go up like this with these peaks and these troughs, peaks, trough. But what are they actually doing? Now, essentially what they're doing is they are taking external liquidity and then internal. So the market only ever does two things, moves from internal to external liquidity or external to internal liquidity. Now, let's define what we mean by external and internal liquidity. So, external liquidity is essentially your high and your low of the current range. Very simple. You just mark out your high, mark out your low. Obviously, in a downtrend, we're going to be more interested in targeting the lows. And in an uptrend, we're going to be more interested in targeting the highs. Our internal liquidity is a POI within this range. So, within this range here. And I usually use a fair value gap or an order block. So, for example, looking at this, we now have our external high, our external low, and our internal order block. And if we go back to this rule, which is all price ever does is move from internal to external and external to internal, you can see right now we're at internal liquidity, so we should move to external liquidity. After we've moved to external liquidity, what should we do? That's right, we move back to internal. So we're going to have another bit of internal liquidity. We're going to come back up to that. And then what we're going to do after we take internal liquidity, that's right, we take external. And again, this is in essence how trends form. So internal, external, internal, external, internal, external, internal, and etc., etc., right? And the only time this fails is when we have a reversal, which is obviously only 20% of the time because 80% of the time the market is going to be trending. And the main time frames you want to deploy these on is the daily and the 4-hour chart. You can go a bit higher if you want, but if we're talking about daily bias, the main thing you want is the daily and the 4-hour. So I'm going to go through this on the daily very simply to show you exactly how you can do the same thing. So if we go back to when our trade was, which was here, you can see we have what have we most recently done. We've most recently taken an external high. So what do we do after we take external liquidity? That's right, we look for our internal order block. So essentially we want price to go down to our internal order block. When it's at our internal order block, we then want it to take our external high and then back down to another order block, and then obviously so on and so forth as we've covered. So looking at this market very simply, we can see that we are coming from external liquidity and targeting internal liquidity. So our target is this order block right here. Now if we go into the CRT, so let's go back to here, which is just before the trade was placed. So you can see we have candle A. You really want candle A to be a big candle, but as I said, it can be any candle. We mark out the high and we mark out the low. And you can see what we've done here in candle B is we've taken out the candle high and then closed back within the range, which as we said means we're automatically going to be targeting the opposing low. Okay, so candle high, swept, shows manipulation of the highs. So we're now going to target the low. Right, so now we've got our two confluences, our two daily bias confluences, both telling us that the market's bearish, giving us a clear direction that we should look for sells. Now we've done that, we can move on to step 2, which as we've already covered is wait for the Asia high or low to be swept. Obviously we're looking at sells, so we want the Asia high to be swept, which you can see is swept there. And now we'll get on to the final step, which is the one I haven't explained yet, which is our confirmation and how we actually get into the trade itself. So essentially all you're really looking for when the Asia high is swept is some form of confirmation, right? So sorry, that actually wasn't the sweep there. You've got to be careful with this. You see I nearly got it wrong there. See that green box ends here. So this is actually the Asia high right here, right? So you can see it was swept right there. Now all you're really looking for is confirmation that once we get to this point, we are actually ready to reverse. And all you got to do for this is go on to a lower time frame. So again, let's go back in time a little bit. And you can see right here we've swept the Asia high. And what do? We target the Asia low. Okay, so that is really the move that we typically see all the time. And that is it there, has been completed. Now, what we do after that move has occurred is you can then look for the re-entry of that move. Now, the re-entry is so simple. All you do, you draw this on and you draw on your OTE. And your OTE are these levels right here. 705, 79 and 62. So all we're doing now is we're waiting for price to return to our level, and then we're hoping that price distributes down lower. Now you could have caught this earlier entry here if you want, just so happens that I caught the one that was a little bit later on, but either way they're very similar in terms of the entry. If you're wondering how you would have caught the immediate one, go watch my most recent video where I talk about that. But this one we're more focusing on when we've already had the move. So we've already moved from the high to the low, and then we're coming back up again, and then we're moving down. And as I said, the reason why I'm focusing on this one is because a lot of people see this as consolidation. They see this as price just chopping up and down, and they think, I'm not going to trade, the market's in consolidation, when really we know exactly what's going on. But you wouldn't if you hid all this. It does kind of look like, if you play it out a little bit more, it does kind of look like the market's just chopping up and down, right? But knowing what we know now, we know exactly what's going on. So what I'll do at this point, as I said, is I'll mark on my OTE. So I'll draw that from the range high to the range low of the move from the Asia high to the Asia low. And I'm looking for my re-entry. Okay, so I'm going to go down now onto the lower time frames. I'm going to wait for us to tap in to our optimal trade entry, OTE. And then I'm going to look for confirmation. So you can see we've tapped in now. So what I'm really looking for now is either one of two things. Essentially, a market structure shift, which is obviously a break of a low as our confirmation, or an IFEG, which is essentially a disrespected fair value gap. For an IFEG, I'll use the 5 or 15 minute time frame. And for market structure shift, I'll use any time frame as low as the 1 minute. But that would be an IFEG, and then you enter off of that. Again, if you want a little bit more detail onto these confirmations, then go watch my most recent video before this, which is where I break down my whole trading framework. So you can see now we have tapped into the OTE, right? So here was the move down, the initial move down, and then here is us tapping back in. So now that we've tapped back in, I'm going to be looking for my market structure shift. So I'm going to mark out all the relevant lows that would constitute a market structure shift, which on the 1 minute would be this one right here. So let's play the market out. Okay, you can see we've made another high. So some people consider this a low. I'm actually still going to just consider this one for now. Wait and see what the market does. So here we can see the price makes another low. And again, we're just waiting for this to be broken in order to confirm our trade and then get in. So if we play it out, So you can see we broke the low there. So at this point here, we are valid to get in the trade, and all we got to do now is look for our exact entry and then place the limit. Now let's quickly recap what we've seen. So we've seen the steps we've done: wait for the Asia high to be swept, wait for that initial move, and then we drew on our OTE and waited for price to tap back in. Price tapped back in and now has provided us a market structure shift, showing that the lower time frame is starting to align with the higher time frame after taking our key bit of liquidity and returning to the OTE. So what I'll do now is I'll look at the market and I'll try and pick out a point of interest within this leg that gave us the change of character. If you want to make it easy for yourself, draw on from your high to your low. You can use the OTE if you want, but to keep it super simple, literally just draw on 0, 1 and 0.5, and this is going to give you obviously the premium section and the discount section. If you're selling, you want to sell at a premium. So we're essentially looking at only POIs within the premium. I saw this order block here. If I hide this, you'll probably be able to see it a bit clearer. You can see this is the last kind of indecisive candle before the leg down, which broke that low. Okay, so that is going to be my actual entry. You can see I mark out the order block. I'll put the entry on the order block, stop loss on that high that led to the change of character, and then your TP can either be the Asia low or the current London low, or if in our example you've got quite a clear higher time frame bias, you can aim for the prior day low. Now look how in this market here we know exactly what's going on. This is not random. People that don't understand the market will look at this and go, oh, consolidation is just random. There's no point taking a trade. But if you know how the different sections work and London's relationship to the Asia session, then you'll know exactly what's going on here. And you can see it's not really the first time this has happened. So if we look over here, London swept the Asia high. We ended up trading into the Asia low. Okay, same thing here. 7 a.m. here, we sweep the London low, end up trading into the Asia high. So this is a move we see over and over again, and it really just shows you that nothing's really random. People look at the market and just assume it's random because they don't really understand what's going on. Even sideways price action isn't random. You can see, so there is our trade right there. I can get rid of this because we don't need it anymore. And again, just one more time so you don't forget, Asia high swept and we got the move we wanted. We then draw on our OTE from the high to the low. Wait for price to get back in there. Once price does get back in there, we wait for our confirmation on the lower time frame, which we got through a 1 minute change of character or market structure shift, and that's all we need to get into the trade. Then we'll go on the 5 minute, mark out our POI, and it's as simple as that. And then as you can see, we tap in pretty soon after, and we did actually consolidate even within this for a while, but obviously ended up running down and hitting full TP. We're a bit of an aggressive retracement here, not gonna lie, you'd probably be shitting yourself if you was in this with me. But we had the confidence. As I said, we've done a higher time frame bias. We knew we was bearish, so yeah, there's no real doubt in our mind that this was a good hold. So yeah, hopefully you found this useful, boys, and hopefully you now realise how you can actually trade this consolidation. And honestly, boys, this is something you see so much. Again, sweep of the Asia high, sell off down to the Asia low. Sweep of the Asia high, sell off down to the Asia low. Over and over and over again, we'll see this. My last video depicts how you can catch this initial move, the initial sweep and move. And this video shows how even if you miss the initial sweep and move, you can then use the OTE and a market structure shift to still find a trade. And that is essentially the ALG re-entry covered, boys. Obviously, it can go a lot more in depth in order to get better. But this is essentially it. And this is something I use every single day. Not only did I catch this 6% trade on Monday, I also caught this exact same trade again on Tuesday. But this one was using the prior video, one where we literally catch it straight away. To briefly explain it, it's a lot simpler than what this one. All you do is you wait for Asia high sweep, confirmation, enter. So the first one's a lot easier, but obviously it takes a bit more prediction. With this one, you're not really predicting because the moves actually happened. You're just catching the retap of that. So yeah, this one here, I will do a full case study on this most likely, but you can see sweep the Asia high, 5 minute IFEG, entry on the IFEG, stop loss on the high, TP on the current low. You get that move. And again, just so clean. Swept the Asia low, trade up to the Asia high, swept the Asia high, trade back down to the low. It's a move we see over and over again, and as you can see, delivered us 12% in just 2 days. 2 different entries, but both using the exact same logic. where a lot of people see it as consolidation, we know exactly what's going on. Again, if you hit all this, some people would probably look at this area of the market right here and say, okay, yeah, this is just consolidation. Price isn't actually doing anything. But we know that's not the case. So I hope you found this video useful. I'm live every day trading this exact strategy. 8:30 a.m. to 12:30 every single day. I'll be there on YouTube trading this. So tune in if you want to get better at trading it. Join my Discord in the description if you want to lock in with a good community. Free Discord, but a good community that's actually there to help you and actually there for all of us to succeed. Then go join that down below. But I appreciate you lot watching, and I'll catch you in the next one, boys. Sweet.
You can!